Welcome to another episode of our daily market review. Today has closed, Wednesday midweek has closed, and we are back again to look at what we have in front of us, how our levels are being treated, and if we still have, generally speaking, if our bias is still intact or not, right? So quickly, yesterday, this is where we left off. Price came all the way. Tuesday price came all the way to this other block that I identified here. This you can actually say it's a proportion block because this is the entire block. If you look at yesterday's video, I marked out this whole range, and then I said that price is currently trading below the 50% of it into this proportion block. Now today, Wednesday traded, we have actually seen a bounce of the mid portion of the identified level and then closed back above this inefficiency level as well as inside of the previous week's trading range, right? So I'll switch to the H1 quickly, and then I would go yesterday. This is what I marked out. And then I said that I wanted to see how price would behave after taking this out, right? Price was hitting this, was using this as a ceiling or a resistance level. So I wanted to see, I said that it's either we hit this one and then close below this level and then use that as a continuation to the downside, or price will just consolidate and then come back with you, right? So if you refer to the video I posted yesterday, everything is there. I explained everything, how I'm going to play it if the market decides to come back, how I was going to play it, and then also if the market decides to go upwards. However, I took a trade here from today. I will explain it. I took a trade whilst we came back to this um, inefficiency level on this candle, and I'll show you and I could explain why I did that, right? So price came in, took this one out. The level you are seeing here is from the daily, right? It's a flipped um, inefficiency level from the daily. This is it, this inefficiency level. This is an inefficiency level. Price actually closed below it, and then on the H1 level, on the H1 time frame, he had run this induced high into that level, and then price traded to this point. When price opened, it came back for that high. Okay, price came back for that high over here, took it out, and then dropped. Right. So the only time I came to the market was during New York, when New York opened. Right. I had seen this drop into this OB, right? I failed and I didn't take action because in the morning of 8:30 there was going to be Trump's speech, and then also I'm seeing that the dollar is trading into a a higher time frame key level, which is the other block. All right, so I didn't really take action until when I saw price came back to respect this level. Okay, when price came back to respect this level, that was when I took a trade on GU, and then on my Fundam pips I took a GU long, and then on the FTMO I took USD Swiss franc short. So I'll explain the two trades as we move on. So switch to Euro USD. This is how I played it. I didn't take this. So Euro USD, the same thing. This level you are seeing here is from the daily, and then also I was using the previous week's high as the resistor as a support level, right? So we had two support levels combining. So price came to take this one out, and then we could see um, sort of an expansion. So in New York, price came back into this order block, and then this is what I was going to use if I shorted this. But I shorted, it was rather cable that I bought. So I'll show you the cable trade. So below this one, I was playing within this inefficiency level, and then this was going to be the invalidating point, right? And then also I said that if price is able to close below this one and then also below this level, then it means that we are heading back in. If you watch the previous video I did yesterday, I explained everything, right? I explained everything. Everything is on there. But this trade, this is what I was actually playing it, right? So let me go to the GU trade. And then it is, I'll be able to explain it well to you when I switch to M15. Okay, so for the GU trade, I closed with very tiny profit, right? So for the GU H1, initially, this was my resistance level, right? I wanted to see if price would be able to close above this level here, this inefficiency level, so that I could buy it. So this is what I was looking for. Okay, if you did this, then I was going to play it to the previous week's high since cable was lagging behind, right? But you could see that it resisted again, and then it tanked. This is the previous day's low, right? So this is Tuesday's low. No, sorry, this is Monday's low. Switch to the daily. So I saw that we came back for Tuesday's low. This is Tuesday. This candle is Tuesday. So this is a flat bottom. And then I was seeing that price has come to take it out and was rejecting. So I immediately switched to H1. So on the H1 time frame, I'm putting the separators. Right. So price came back for the Tuesday's low and then straight away came all the way to close above this one. Right. You could see that there's an inefficiency level here. This one quite deep so that you can see it. There's an inefficiency level there, right? Right. So price took out the previous day's low and then came back to close above the inefficiency level on the H1 level, but it was still being resisted, right? But so here's what I did. So you could see that on the M15, this inefficiency level was what I was looking for. Price actually came to it after taking out the previous day's low, came first order block respected, created another one here, and then sort of consolidated and then finally traded above it, right? So this is what I was actually using. And that's why I took the trade here, right? I was on this candle when this candle was actually pulling back. That's where I took the trade, this candle, right? So this is what I was trying to, this is what I'm trying to. Price takes out the previous day's low, okay? Comes back here, closes above this one, proportion block forms here, then consolidates, closes above that, forms another proportion blocks here in the inefficiency level, and then expands. All right. So here's what I did. This is proportion block also, right? So as soon as I saw price come back to it, that was when I took a trade. And you can see that price actually went all the way Let me see. Price went all the way right to that mid portion and to the highs, right? And then rejected that same level again. So if price had closed above this one, then my target would be the previous week's high, right? I hope this one makes sense. You understand the dynamics of why I took this one, right? If you don't really understand, you can rewatch the video to understand it. I'm coming to explain why I exited the trade. So on DXY, which is the dollar index, even though I decided to trade short the DXY, so this is the first candle closing below it. On the H1, you would see it. So it was on this candle that the 9 a.m. candle that I took the short, I took the long on GBP USD. And then on the 10 p.m. candle, I closed the trade because price, as I was expecting it to come down, did not, but rather closed above this fair value gap or inefficiency level. As soon as I saw a bullish candle trading through this inefficiency level, I came back to cable and then I closed it around, I closed the trade around this level, right? I closed around this level. Let me explain quickly the Swissy. The Swissy was a complete loss, right? So for the Swissy, the same thing. We came back for this high and then we tanked. Okay. I used this one as the block. I used this one as a change in state of delivery. And then this inefficiency level was what I was trading. Right. So I put my limits on this one. And then the stop loss here was about 20 pips. Right. And then I was looking for 2-in-1, 2-to-1. Right. So it was this. Right. But then this was my FTMO. It was a very small, measly loss. I didn't really care about it as much as I did for the cable, right? So um, it failed, closed within the first candle closed within the inefficiency level, and then the second candle came all the way to put me out, right? So that's basically what happened today. Today is Wednesday. Today is when I took my first trade. One small win, one small loss, both on different accounts. But quickly, let me go to the expectation for the day. This video might be longer than the previous ones, but I hope it's fine. So, like I said, we've seen a bounce off of this and close below and close back above this inefficiency level, and also within the previous week's trading range. On the H4, we have seen a bounce off of this or the block. Price couldn't close below it, and then we have formed also this one, and then we have closed above this inefficiency level and also back inside of the previous week's range, right? So the H4 as it stands now, this is what I'm looking at. Okay. I'll be looking at this one, right? I would love to see price trade to close above this inefficiency level as a first sign of the H4 um, order flow turning bullish, right? I would love to see price um, do this trade to this level and then use this to trade back in, right? let me just, and then from here, I want to see this. Right, this is what I'm sort of looking for, right? Once this happens, then it means that it is likely that we'll continue to go for our buy side liquidity, which is our target and our ultimate target for this week, right? So we have only the second part of the week, the trading week left, which is Thursday and Friday. I am hoping that this would be Tuesday's low would be the low of the week, and then now when Thursday is here, we see a pullback. We'll use this level as a support level for continuation, right? Ideally, I would love to see price trade to close above this inefficiency level on the H4 before this, right? Something like that, right? So have two scenarios here. Either price comes down to bounce off of this inefficiency level before it comes to close above this, or close above the inefficiency level and then comes to use that as support to trade higher, right? But any which way, I do not want to see price start showing signs of bearishness on the either M1, no, sorry, on the H1 or the M15. M15, I wouldn't be so much more interested in the M15 because of how dicey the charts are looking. I'd rather want to play in the higher time frames, which is the H1 and the H4. I'll be watching the H1 and the H4 more for the rest of the trading week, right? So that's about it for today. That's the scenario I'll be looking at for Thursday's trading. For this, I would want to see this one and then continuation, right? From there, right? This one looks quite easy. And let me see for cable. So cable is quite choppy. Cable on the daily. And clean chart. Cable on the daily. So it actually came back to close within the Monday's trading range. Yesterday, Tuesday, we closed above it. Wednesday, we came back. We are back closing within inside of it. So let's see the H4 if we have anything. I would love to see this high stay, and also price comes to close below this one, this level. That would be so nice. Let's see what we have on the H1. Yeah, exactly. So if price comes to close, if price comes all the way to close below this, as we have here, this is what I'll be looking to trade, like that, right? So ladies and gentlemen, this has been longer than usual. I had to explain the trades I've taken, also let you know the idea behind it. This is my expectation going into the rest of the week. And so I will see you in the next video. Thank you so much for your time. If you have any questions, kindly put them in the comment section. If the video is any helpful, like and subscribe for more. Right? Thank you so much. Goodbye. See you.